Good day from CTP here in Prague, together with Richard Wilkinson. My name is Remon, and I am happy to share with you the results from 2022, the first 6 months. We've been busy, and I can report to you that the first 6 months have been extremely good. We have seen a fantastic rental income with high occupancy at around 95%. We've seen rental growth 4.3%, like for like, and the numbers will be presented to you in more detail by Richard Wilkinson. But in terms of rental income per year, we are now looking at 538 million euro of rent for a 12 months term. In particular, in the Czech Republic, we see high occupancy, 98%. Throughout the portfolio, it is currently 95%. So we continue to see strong demand, and this is why we have 1.4 million square meters of properties under construction. Most of those buildings are being built for existing tenants, mostly within existing business parks. And we do that as a good tradition at CTP within 10 years back. And that's what we say. That means 10% yield on cost. And then again, has been, as always, a challenge. Also our suppliers who continue to support us, the fact that we do have land which we bought at historically low prices, with infrastructure which we share, because we do those parks. But still, you need to still do it. Numbers don't lie. We did it again during the first half of 2022. So big thank you to all of the 620 boys and girls at CTP, 50-50 male-female, average 39. They get older as well, but they're still very eager and dynamic, hardworking bunch of people. One of the things I want to highlight, solar energy. We build parks, we have infrastructure in the parks with a local distribution network. So how easy is it for us to add solar on the rooftop, create energy and sell that within the park? And that's what we are doing. We have been doing that, but we want to accelerate that. That means end of the year 40 megawatt, 40, end of next year 100, and we have a plan to roll out more than 300 megawatt of power. And that is also highly appreciated by our tenants, besides the fact that we make good money on that. Maybe give you a bit of a feel for the region of where we operate. 10 countries throughout Europe, from the North Sea to the Black Sea. Different countries, 4 core markets, Czechoslovakia, Hungary and Romania, where CTP continue to gain market share. We're also very positive about the new markets, what we call growth markets, Bulgaria, Serbia and Poland. Western European markets, they perform beyond expectation, and I'm happy and proud of that. The Toyota deal in Vienna with 2 projects currently under construction in the capital of Austria. Quite nice, which we also built for very competitive rates per square meter. Netherlands going well, and excited about Germany. Of course, Poland, I want to talk about that more because we've been looking at that market for a long time. The largest economy in Central Europe, 40 million people along the German border. And we found the window, we found the opportunity to enter that market and buy more than 2.6 million square meters of land, zoned, serviced, ready for development. Strong demand from our existing tenants to go to Poland, to extend their activities, nearshoring, friendshoring, close by, where you can drive in and out from Germany, etc. Motivated workforce. The government in Poland support a lot these kind of initiatives. So we are excited about that opportunity. We bought land for average 70 euro per square meter with zoning, permitting, infrastructure. And we are building. We have 400,000 square meters under construction. We have a team of 30 people, 3 offices, Katowice, Poznan and Warsaw, of course. And very excited about that opportunity. At the same time, and maybe that is because of the German tenants we have with the acquisition of the Deutsche Industrie, very much like Poland for their growth as well. And so overall, throughout the region, strong demand, not just nearshoring or value add type of activities, but also inventory building, because of you want to make sure that you have a bit of extra stock, which supply chains have been proven to be not always reliable. It's more challenging to get product delivered from a bit further away. So nearshoring, inventory building, that all together with e-commerce. And the fact that, especially in Central Europe, we have seen an undersupply. If you look at the markets, then one of the characteristics is that there is just not a lot of space here, which we saw 20-something years ago, and we continue to build property, most of the properties being leased to our existing tenants. And when you talk about tenants, very loyal, long-term, of course, the largest logistics service providers in the world, DHL, Schenker, DSV, all of those great companies, privileged to work for, pay bills on time, all the time, but also grow, and we help them to grow, we grow with them. But also companies involved in manufacturing, and it can be all type of different companies like the Honeywells and the ABBs, but also companies involved in furniture making for IKEA. But we like to work for them all, and all of them create ecosystems in our parks, and our top 10 parks, I think, is 35% of our total lettable area. Large parks with lots of good for local communities, with nothing but long-term commitment and land. 20 million square meters of land. That's a lot of work still to build on those land plots, which will help us to grow and double the size of our company. Well, we have ambition for sure, and we have a lot of land. What else should we do with the land then? Build on it. I want to give the word to Richard, talk you through the very interesting part of the presentation, all about the financials, the cost of funding, and of course the rest of the year, and what has already been put in place for us to continue building this business with and for you. Thank you for your attention.
Thanks, Remon. We've delivered a strong performance in the first half of 2022, both operationally and financially. We generated a significant growth in our net rental income, up 32% to 211.5 million euros. And as Remon have said, we've seen strong like-for-like rental growth of 4.3%. This is driven by strong demand from our tenants, limited supply in our markets, and our focus on maximizing revenues. We're really pleased with the excellent revaluation result of 499 million euros in the first half. That's predominantly driven by the increase in rental levels that we are seeing in Central and Eastern European markets. And secondly, by the growth of our development activity. There's only a marginal impact from yield compression. Overall, this gives a significant increase in profit after tax to 490 million euros, reflecting the growth in rental income we see, our excellent revaluation result, but also our significantly lower financing costs. We increased our EPRA earnings by 37% to 126 million euros in the first half of 2022, and we increased our EPRA earnings per share by 20% to 30 cents. So we are on track to deliver our full year 2022 EPS target of 60 cents per share. We continue to grow the gross asset value of our investment portfolio. Together with the properties under development, this stands now at over 10.4 billion euros. That's an increase of 33% on a year ago. Our EPRA net tangible assets per share have increased by 11% to 13.39 euros. And we continue to deliver our highly profitable development pipeline. With a yield on cost of 10% for the 1.4 million square meters of properties that we had under development at the end of the first half of 2022. And we are financially robust. Our loan to value of 43.9% is comfortably in our range of 40 to 45. Our average cost of debt is only 1.15%, and the average maturity of our debt is just under 6 years. And with almost 1.4 billion euros of available liquidity to meet our future funding needs, we are very well positioned for the future. Finally, we're very pleased to announce today an interim dividend of 22 cents per share. This reflects our strong first half performance and the confidence we have in our very strong fundamentals. Let me quickly touch on some of those points in more detail for you. First, the consistently strong growth in our income streams. You can see here at the 30th of June this year our contracted income for the next 12 months is 538 million euros. That's a significant increase of 41% over last year's number. This is driven by a combination of the increase in rents on our standing portfolio, the significant progress on our development pipeline, and the acquisitions we've made over the last 12 months. And this gives us the confidence that our income will continue to grow. Put simply, we have a robust and growing income stream from our investment portfolio. And that rental income is underpinned by the strong demand from our tenants. In the first half of 2022, we leased a total of 935,000 square meters. Let's take a closer look at our revaluation gain of 499 million euros in the first half of this year. The key point to take here is that it's rental growth and our development activity that is driving the valuation gain. Over 300 million of this gain is driven by the increase in like-for-like rental levels, so the ERVs on our portfolio are increasing significantly. A further 114 million euros of the revaluation gain is driven by the progress in our development pipeline. So almost 90% of the revaluation gain is made up of these factors. There's only a marginal impact from yield compression. I want to finish by underscoring my earlier point about our financial strength. With a loan to value of 43.9%, we remain comfortably within our target leverage range. We have a staggered debt maturity profile with average debt maturity of 5.9 years and no significant repayments until Q4 of 2023. Our cost of debt is market-leading 1.15%, and 75% of our debt is unsecured following the issuance of our last bond in January. We have a very comfortable interest coverage ratio of 4.6 times, and all of our debt is fixed rate, so we are less exposed to the increase in interest rates we've just seen. We have a solid liquidity position. At the end of June, we had 630 million euros of cash available, and overall we have available liquidity of 1.4 billion euros. This all positions us very well for the future, even in a more uncertain environment. We continue to see strong ongoing demand from our tenants. That allowed us to grow our market share in our core markets in the last year. But we now expect to see attractive opportunities that we will look to capitalize on as and when they arise. Overall, this means that while being alert, aware, and agile, we remain confident that we will continue to drive our value creation strategy into the future. Thank you for your attention, and we look forward to your questions.
If you would like to ask a question, we invite you to press star followed by 1 on your telephone keypad. If you change your mind, you can press star followed by 2 to withdraw your question. Please ensure that you are unmuted locally when preparing to ask your question. You can also type your questions via the webcast in the webcast box. As a reminder, if you would like to ask a question, we invite you to press star followed by 1 or type your questions via the webcast. We have a typed question from the webcast from Peter Runneboom. Pre-lets moved only slightly up to 47%. This is much lower compared to last year. What are the reasons behind this? Is this the ALC?
I can take that question. This is Remon speaking. Thank you, Peter. Yeah, indeed, we are around 45-50% pre-let on the pipeline, on the buildings under construction. mostly again to existing clients within existing parks. And for the rest of the space, most of the space, we are in advanced negotiations with our tenants. And and there is a strong demand, as Richard also explained in the presentation earlier, and that's what we see throughout the region. So we are confident that we're going to lease up the space and meet the 95% occupancy target which we have. However, we're careful here, and we will interrupt, stop, delay, or postpone, slow down the developments if we see that the market changes in such a way that there is less demand. As you know, one of the good things about CTP is that we are our in-house general contractor. What that means is that we do not order a building at a general contractor to build for us a property, but instead CTP appoint companies to build part of the property. That gives all kind of advantages. It's cheaper. You remain in control of the construction. You make sure you get the exact product of what you want, and so on. But also, of course, it gives a great amount of flexibility over the project. You could change the building during construction. You could do modifications. You could also accelerate or hold or slow down. Now, the hold and slow down part of the discussion is not at the moment relevant, because we do see strong demand. And and honestly, some of our peers, they supply less product than they used to, and that is in favor for CTP. What I'm trying to say is that there is always supply and demand. We see less supply from the competition. We see and continue to see strong demand. So yeah, confident. Construction cost, we have them in control, under control. We see construction cost stabilize. We mentioned that earlier, Q1. That is good for us in order to keep our 10% yield on cost, together with the rental growth, which we also see in countries like Poland, which we haven't seen. Now we see proof of 20% rental growth compared to last year. And, that has been confirmed also to us yesterday by independent market specialist in Warsaw yesterday when we had our board meeting in Warsaw. So I hope that answers your question.
Thank you. Before we do move on to the next question, as a reminder, that is star followed by 1 to register a question via the telephone line. And you can also type your questions via the webcast. We have another question that's been submitted. Hello, how do you feel with a pre-letting ratio of 47% on your pipeline, below historical average, in a context of lower demand entering into H2? Are you confident to reach full occupancy on those new units?
Yeah, I've already answered this question. Any other questions?
We have a question registered from Jonathan Kalnitter of Goldman Sachs. Can you please comment on the strength of the demand you are seeing, and if you expect your pre-let rate to quickly increase? Where do you have most vacancy currently?
Yeah, I can take this question with starting with to answer the second part of the question, where we have most of the vacancy. At the moment, that would be at our Bucharest West project, where we are below 95%. I think we are currently around 90%, but we did sign a letter of intent and we are closing a lease contract, but that is not signed yet. So by the end of June, that was the project with the highest vacancy, and the other way around, highest occupancy would be around the Czech Republic with 98%. So that's with respect to standing income producing. So we are at 95%. When you refer to pipeline, that is now the third question with respect to this. I did explain it earlier, but maybe I can give a bit more flavor or color or depth in where does this demand come from. And then I would start with explaining that, especially in the region of Central Europe, the market, the characteristic of the market is that there is less warehouse space and properties for light industrial than per capita than there is in Western European markets. So, and then there's still a lot of difference. So in the Czech Republic, for example, I try to illustrate 10 million people, 10 million square meter of warehouse space. Poland, 40 million people, 24 million square meter of light industrial warehouse space. I think that are the numbers. If you look at Hungary, if you look at Romania, 20 million people, 6 million square meters. So there is still, the market is still, there's still an undersupply and not enough space for logistics and light industrial. So there is still catching up to do. So there is not oversupply. It's not that you see vacancy in the market. Occupancy levels remain very high, so above 95% throughout the region of Central Europe. So that's one, that's the characteristic of the market. So it's not just us, I mean, there's no one with space or with a lot of vacant space. No, not any of our colleagues, peers, developers. Second, so this is the market. Then you say, okay, where does the demand come from? Demand comes from mostly from existing clients. Why are they looking for space? Well, for multiple businesses. There can be nearshoring. And nearshoring, what does that mean? Well, yeah, nearshoring is that you try and keep activities in Europe, which maybe historically companies bought from Asia. Now, we all know that 5 years ago, a 20-foot container cost, say, $1,200 shipping cost 5 years ago from Beijing to Rotterdam or somewhere. And now that would cost $12,000 and $10,000. So shipping cost way higher. It's no longer reliability is an issue, but also geopolitical issues, etc. Nah, yeah, the whole thing. And that is a trend. And reshoring is not that you just move production activity from Asia to Europe. That is going to take time. That's a process. But we see clear proof of that happening. The first step is often that our clients are building inventory. So they need more stock. They need more warehouse space to make sure that they have extra products in the warehouse to avoid that they run out and then they can't continue to manufacture and supply their clients. And then it's not just demand today, and that's a structural demand also we foresee for the future. Because if you want to nearshore, where you bring your production to? I mean, to Central Europe. Why? Because labor costs in Poland, for example, are 1/3 of what labor costs are in Germany. So, and then we can also look into productivity and other things, which are other reasons why you would bring it to Poland or to the region of Central Europe and not to the western part of Europe. So that's where demand comes from. But also we signed, I can say that, right? The Budapest deal was signed in the second half of the year, the first half of the year. Yeah. Tesco, 100,000 square meter in Budapest. And that's Tesco is a retailer, but a supermarket operator. But there's also other of these companies where we sign leases, also with fashion retailers we do. So there is a demand coming not just from nearshoring, but also from others. So confident, yeah. We are building this pipeline because we see strong demand from existing tenants.
Thank you. We have a question registered from Oliver Simkovic of RBI, who has asked, property operating expenses increased significantly in Q2, 29.4 million euros. What is the driver for this? Are there any one-off property expenses booked in the quarter?
Yeah, I'm happy to take that question. Thank you, Oliver. The first point to mention is that Q2 was the first quarter where we had the Deutsche Industrie portfolio fully integrated. So over 10 million euros of the increase in Q2 relates to that. One other material item that we had non-recurring is one significant roof repair in the Czech Republic. Otherwise, that seasonality would expect the second half of the year to be lower than the second half of last year, so that we are in line to meet our OPEX target for the year.
Thank you. We have a follow-up question submitted from Jonathan Kownator of Goldman Sachs. Can you please comment on the progress of your integration of the German business?
Thank you, Jonathan. I can take that. And Richard, just jump in if you have anything to add. I'm actually calling out of Berlin. So far good, beyond expectations, as I said. What does that mean? That means that maybe from an organizational point of view, as you remember, when we bought the Deutsche Industrie, it is 90 properties, 90, 1.6 million square meter of properties. But no platform really. All of the asset management was outsourced to a different company. So what we did initially is we started to work on a team, and I can report to you that that has gone very, very nicely. We have been able to hire some very good, talented, young property people, and that then, as a result of that, we opened 3 offices, one in Berlin for the northern part, and another one in Düsseldorf for West, and the third that is in the southern part of Germany. I need a bit more time of that. So we have split the region. We have people on board. We are around 30 people by year end, which is good, in line with what we thought. Point one. Second, the systems, the software, in order for us to get control over the business, we're working on that. I'm actually here with Patrick Zedmeier also to talk today to our colleagues here in Berlin, make sure that we have software in place, which we do have, so we can get control over the business. The plan is that the asset management company will end by the end of this year, and as of January 1st, 2023, we're going to do that in-house. So we are in a bit of a transformation. That is the, let's say, the boring part, but also an important part to make sure that we get in control over the business. Point one. Point two, commercially, very good. We bought it, and these properties, they produce 37 euro per square meter per year. So like 3 euro per square meter per month. It is completely and far off what it should do. So there is rental growth we see, and we need a bit of time to prove that in numbers, because we only bought this in February. Some of the leases expired, and we renegotiate new leases with either existing or with new tenants, double digit. For sure. Also in the Czech Republic, by the way, yeah, we can do double-digit growth. If we have expiry and we have a new tenant in, then we've seen between 10 and 20% rental growth. But anyway, that's also what we're going to see in Germany, and what we see already. Proof of that will follow during the second half of 2022. What is a positive thing for me is I thought, oh yeah, we bought these properties. Some of them are older, not all of them are new. All of them are good enough for tenants to be in those buildings. There's no empty building, and maybe one, but not a lot. So there's some empty spaces in those properties. That's where the vacancy is. But I was a bit afraid of capex. So I thought, okay, now they come and they say now they know they have a rich landlord, and now they come to me and they want to know everything. But that's not the case. So we are still in the budget of what we thought. So positive, yeah. And of course, when I drive around here, I don't just look at buildings we own. I also look at buildings we don't own and land we don't own, and maybe we would like to own to develop. So that's the positive part. So the development angle. We have currently 3 projects, one south of Berlin, one in the north, one in Bremen, which are new build properties. I did report to you the other day that we have a clear pipeline of 200,000 square meters. Some of them start this year and the rest will follow first half next year. And we want to grow that. So we want to use this as a start entry. Positive. And positive is also that some of the tenants I talked to here in Germany, they like to grow their business with us in other parts of the region. So they say, hey, can you help us with our activity in Slovakia, or you have space in Poland, because we want to do more manufacturing, more activity in the region here. So that's another benefit of the German acquisition, and it's good for my German.
Thank you. We have another question registered, which is, how are you planning for the nascent energy crisis that is likely to hit Europe this winter? Is it business as usual, or do you need to make plans?
Yeah, I think I can take that one. I think that the answer to that question is none of us know for sure to what extent there really will be a crisis in energy in the winter. So yeah, of course we are very aware of that. We have secured supplies and capacities for our tenants. So we hope and we think that we are in a good position. We continue to be aware and do what we can to prepare for all eventualities.
Thank you. We have a question registered from Francesca Ferragina of ING, who has asked, on the investment market, could you please share your vision on yields in your regions? Considering the visibility you have on the market and the discussions with tenants, can you share your feelings for the coming periods?
Yeah, maybe I can take the point on yields, and I think Remon has already covered the perspective on tenant demand, which we continue to see as very strong. That's also confirmed by discussions with our tenants, but also everyone who's representing tenants. So if you look at all of the reports coming out of the markets at the moment, they're all highlighting ongoing record take-up from tenants with extremely low vacancy in the market. So we remain very confident about the resilience and the continuation of tenant demand. Regarding yields, so Central European yields, one of the things we've said consistently, that we think that there will be decompression between, or yield compression between Western Europe and Central Europe. Central European yields never really converged to Western European levels. So in Western Europe, you are seeing transactions in a 3.25% yield range. That never happened in Central Europe. It's also one of the reasons why our gross valuation yield was 6.3% at the 30th of June. So we are confident that we won't see any significant shift up in yields. Rather, if there's going to be a yield compression, it will be Western yields, Western European yields rising. Don't see any indication at the moment that Central European yields should increase.
Thank you. We have another question registered, which is how much of your rentals are indexed to CPI indices in Europe? When do you expect such adaptations to be visible in the revenue numbers?
Yeah, thank you for the question. Yeah, so the mid of the year was just under 40%. I expect by the end of the year that number to be around the 50% level. You can see that partially already in the numbers. So the like-for-like rental growth of 4.3% reflects the indexation of the past year, but also the rent reversion that Remon was talking about. So if we're signing new leases now, they're at 10, 15, 20% higher levels than a year ago. The indexation increase for 2022 will come in at the start of 2023. So you will see that in the rental income in 2023.
Thank you. We will now pause briefly for any final questions to be registered.
This one regarding interest rate.
There are no further questions registered at this time. We've just had one come in about interest rate costs. So regarding interest rate costs, given market environments, any new bond issuance would likely dramatically increase your overall interest rate cost. Does this harm your ability for taking on new projects, or has this led to a stronger shift into internal financing?
Yeah, thank you for that question. So yeah, one of the things that we have always tried to do is have a very defensive and conservative financing structure. Why we have 1.4 billion euros of liquidity available at the end of Q2. That is at substantially lower costs than current bond yields. Would highlight our ability to also access the bank markets, which are substantially cheaper than bond markets at the moment. We do reflect the increased cost of funding in our calculations on any new projects that we are looking at. So yeah, our return threshold has increased, but that is also been nicely met by the increase in rents that we're seeing. So we're still able to generate new developments at attractive yield on cost of around 10%.
Thank you. Final call for any last question.
I would like to, excuse me, this is Remon speaking. I wanted to add one more thing, maybe, because we did get some questions on the speculative development, the pipeline, the stuff under construction. Maybe just to add, because I'm thinking, what does this concern come from, or how do you guys see that? And maybe I should add that, so in reality, those buildings are being built within existing parks. So, you know, we have a business park with land, infrastructure, with a couple of buildings already built, with tenants in those buildings. We are talking to tenants about, on a daily basis, about their business, about their needs, about how they see it. Of course, initially during Q1 and continuously, we say, hey, are you not afraid of the crisis, recession? People will stop spending money, all of that. But so that's how it works, right? That's why we are 620 people, and you know that we don't sit in a skyscraper somewhere in a boardroom smoking cigars, but we are really on site, and not just us, the management, but also the colleagues in those parks, with a day-to-day and a live cooperation with these tenants about all little things to make sure they can run their business well, make sure that there's public transportation, make sure the lights burn, make sure that the building is in an excellent condition. but also about their business and their needs. So you build within the existing business parks, not in a new location. You know the location, you've been there for years. You build a building of 20,000 square meter because you have a 10,000 square meter pre-lease. I think that is much more how it works in reality for to get that picture. Second, and that is what Richard replied to say, what about the crisis and energy? Yeah, of course, there is a lot of things going on in the world. Energy crisis, but also the nearshoring discussion, geopolitical things. The world is completely a different game than it was 6 months ago or a year ago. And clearly we think of all the impact and consequences. And also know our opinion that we believe that change is opportunity. But when it comes to energy and gas and whether there is enough gas in this part of the world, I think it's not very different to the Western European part of the world. We did check and look, and we see that gas reserves in the region are available. Of course, there is here and there a bit different situation in Hungary or in Serbia compared to other countries and markets, but it's not something we can control, but it's also not something we are very concerned about, I think. And we believe that mid-long term, this will create all kinds of different opportunities, including solar and that energy business, which is now going to be a separate part of our business at CTP, with a separate team, separate department. We have hired people. Didn't talk too much about HR. Super excited about Patrick, of course, and also very, very happy with Dirk joining, not just as a head of research, but also to help us build a strategy and to continue work on the 2026 plan. But anyway, so there's also a new energy department, and then we want to accelerate there. Funding, by the way, has been secured through EIB. So that's one of the options we have there as well. So robust. So we have money before we start do things as a good tradition. That was just to add from my side. Thank you very much.
Thank you. We have had another typed question, which is, of the revaluation effects, how much is attributable to developments and how much to existing property?
Yeah, happy to take that. Thank you. Yeah, I think we mentioned in the video over 300 million euros of the revaluation in the first half of the year is attributable to the growth in ERVs, or the like-for-like rental growth, and just over 114 million euros is attributable to the progress we made in the development pipeline in the first half of the year. So I hope that answers the question.
Thank you. We have our next question, which is, if there is a severe recession in Europe, do CTP believe that they will remain investment grade with Moody's and S&P?
Yeah, thank you for that question. Happy to answer that. I think Remon touched in the video on the strength and the diversity of our tenant base, which is the main driver of our cash flows. If you look at the position of our tenants, the cost of rent for them is normally somewhere between 5 and 10% of their total costs with any individual location. So the cost of the rent, so what they pay us, is normally only a very small portion of their total cost base. What we have seen through the global financial crisis, what we saw through COVID, was no material tick up in bad debt. As a consequence of that, we believe that we will remain investment grade rated with Moody's and Standard & Poor's, as the focus of their activity is on the strength and the resilience of the cash flow that we get from our tenants.
Okay, there are no further questions registered at this time, so I would like to hand back to Remon and Richard for any final remarks.
Yeah, thank you very much. Would like to thank everyone for their attention and for their questions, and we hope to see as many of you as possible at our Capital Markets Day or Investor Day on the 21st and the 22nd of September in Prague. Thank you.